Thank you for joining us. I am Sophy Cesar. I handle strategic investor relations for Canadian North Resources. And today I'm joined by Dr. Trevor Boyd, our recently appointed Vice President of Exploration. Trevor has over 30 years of professional experience in geology working worldwide. Hi, Trevor. Thanks for joining me today.
Hello, Sophie.
So let's get right into it. Canadian North Resources, who are we? Well, we're a late stage exploration and development company. Our flagship property is the Ferguson Lake Project, which you see here, and it's in the emerging mining region of Nunavut in northern Canada. It's a typical magmatic massive sulfide zone over 15 kilometers long, and it contains base metals being copper, nickel, and cobalt, and as well the PGM group, the palladium group, and that would be platinum, palladium, and rhodium. So moving along, we will be making some forward-looking statements and going forward. So why Canadian North Resources? Well, one, the metals that we are looking at are increasingly demanded for strategic metals such as electric vehicles and clean energy. Our asset is 100% owned by us, no NSRs, over just under 100 kilometers squared. There's been over $150 million invested in infrastructure, exploration, and metallurgy, and close to, if not over now at this point, 200,000 meters in drilling. There's high potential here for the project, as you see on the right side of your screen. That is a previous 43-101 that we had done, and Trevor can go into a little bit more details in a couple of slides. But that 43-101, first of all, is historic, and it also didn't take into account the PGM group, which we will be updating and have updated. We have strong shareholder support. We raised over $22 million to go public in April. We're sitting on 7.5 million cash. So we're well funded, and we have an experienced and seasoned team that have worked with majors all across the world and some global mining funds. So as I mentioned, this is our historical 43-101. And when we talk about vast potential, the reason that we have vast potential here is that when this was conducted, there was relatively little or no attention paid to the PGM group in the valuation of the model. So both the model for PGMs and base metals has dramatically increased as it has the demand. And as well, we've also done metallurgical testing and recoveries of the PGM groups, and the results were extremely promising. So let's talk a little bit about the market of these metals. The palladium, the PGM group, and cobalt market is used increasingly in clean energy and high-tech sectors worldwide. There's a huge demand for green energies, and especially electric vehicles, EVs. Many countries have implemented, in the next 10 to 15 years that they want to move away from gasoline vehicles and only be producing electric vehicles. Canada's mandate here is for 2035, there will no longer be any gasoline vehicles sold. So as we can see here on the right of the screen, the spot prices have continuously gone up for all of these metals. And even though there's been a little volatility recently, due to geopolitical issues, there is still a huge demand. And I think that one of the things that makes our project that makes it so great is that we are in a stable geopolitical region. So as the demand for these metals increases, we're perfectly placed to meet that demand going forward. So let's move on to the next slide, sorry. There we go. So copper, nickel, everyone's talking about copper. So And the reason for that is that copper is, the global market for copper is the largest after iron and aluminum. It's used predominantly for building cars, electric vehicles, energy storage, all of that, clean energy that we were talking about. An interesting fact is that 4 times more copper is used in electric vehicles than gasoline vehicles. And I think that's reflected in a report that Goldman Sachs put out in early February. They were reiterating their bullish forecast for copper to be at $6.80 a pound by 2025. Now, we can't forget nickel. Nickel also plays an important part in EVs. It's forecasted that by 2040, the demand for nickel in EVs and energy storage is going to be 31% of the global market. So, our Ferguson Lake Project. Here's a map of our Ferguson Lake Project in association with Canada. So here we have Quebec, and Ferguson Lake is located in the Nunavut Territory, which is just north of Manitoba. One of the great things about the area that we are in is you can see here on our little map, these are all the other mining and exploration projects that are going on in the area. So the territory itself and the government there is very welcoming to mining in the area. They recognize the demand and the economic value it brings. And as you can see here is our Ferguson Lake Project, and just too close to it is the Agnico Eagle project. So moving on, this is one of my favorite things to discuss when we talk about Canadian North Resources. It's our properties infrastructure. So a lot of people say they have great infrastructure and roads leading up to it, but this is just incredible. So we actually have, and you can see here in this picture, a camp, an all-season camp that is sufficient for 55 people. So that includes a full kitchen, dining, accommodations, housing, all the amenities. We also have equipment garages, and all the equipment is already up there. We recently, I believe, updated our internet communications. We have satellites up there. There's pickup trucks, diggers, a portable ball crusher. And here you can see on the bottom of your screen here on the right, this is all the previous historical core that we also have available to us to work with. And I think one of my most favorite things about our site is that we actually have a gravel runway where a plane could land. So I mentioned that there's been over $150 million in expenditures. Here you can see that since we acquired the property in 2013, we've actually done, and Trevor, correct me if I'm wrong, but I think we've done 5 field trips there.
Yes, we have basically surface work, but the focus on most of that work was basically maintaining the infrastructure in good condition, because that is very important in that environment.
So as I've mentioned, over $150 million has been spent on the project. We acquired the project in 2013. And since then, I believe, Trevor, correct me if I'm wrong, we've had 5 fields. We've gone into the field 5 times. Is that correct?
Yes, surface exploration mostly. A lot of work updating and maintaining the camp and heavy equipment. But as well, we've done some geophysical surveys and some core sampling.
Fantastic. And so moving right into it, we're actually going to discuss the mineral resources. And Trevor, maybe if you can give us a highlight on this, that would be great.
Basically, this is a PEA, which was completed in 2011 and filed on Cesar under a company's name called Starfield Resources at the time. And it is basically, it shows, the PEA shows 15.88 million tons of indicated resource and over 30 million tons of inferred. This is basically the delineation of the massive sulfide portion of the mineralization only. And although we do have platinum and palladium numbers in this resource estimation, which is in that document, the platinum and palladium and cobalt were not utilized in the economic assessment of the project. So as a result, it was very much under the technical attributes of the project were very much underused. And that creates an opportunity for others later on.
Fantastic. So we'll move along to the next slide here, and maybe you can walk us through the targeted mineralization zones.
Basically, we're looking at the highest grade, and the most exploration was completed in the West Zone pit area. I would say that in the West Zone pit area and right into the West Zone extension, a lot of that mineralization comes right to the surface and is potentially open pittable. As well, on the East Zone 2, it is open pittable as well. And I'll add that even the East Zone, even though it's in water, is open pittable because it is in less than 5 meters of depth water. So that those areas are extremely rich in terms of massive sulfides, but also in the footwall, all these target areas have a footwall low sulfide PGE rich zone, which has never been fully delineated.
Excellent.
I'll add that there's there are other zones in that area which still need to be defined as resources, like the end zone shown there. On the right.
And that's what creates all this potential that we have in this area, which we go right into. Maybe you can discuss a little bit of that potential.
Basically, the goal is to expand the PGM resource potential of the deposit with the nickel and the copper, because it is adding that component both in the massive sulfides and in the low sulfide footwall resource mineralized bodies. In both those situations, there's potential for adding an incredible amount of value. Of course, these deposits are open at depth. They are open along strike to the west and even a little bit to the east as well. They are open into the lake where the mineralized horizon has not been properly delineated and have not been defined as resources yet. But based on drilling, based on our looking at historical drilling results, there is potential on the west side of Ferguson Lake equal to that as in the West Zone alone.
Great, and this is, I guess, a breakdown a little bit more of that zone. Yes,
that's right. The on the right there is the definition of the airborne electromagnetic time domain anomalies, and as you can see, they extend right across the lake between the west side on where the bar is there, that's good, right, Sophie, there. And also on the east side of the lake there, where the East Zone is. Wow. These just show the unrealized potential of the body. And I'll add that west of that West Zone there, the body, the mineralized body continues at depth. And the only reason it's not shown there on that map is that it's too deep for defining by this method, electromagnetic method. It's deeper. The depth potential of this survey is 350 meters.
Okay, so it'll be deeper than 350 meters.
Yeah.
Excellent.
And that shows that right here. This is a long section of the main West Zone, and it shows some of the areas where there's potential for defining very high grade, thick sulfide bodies for which can be added to the resource.
Excellent.
There is also, as mentioned, as Sophie mentioned, there's a large high grade PGE system in multiple settings. And when I say multiple settings, I mean within the sulfide, the massive sulfide themselves. They are right on the periphery of it. They expand and they widen the zones and make them more attractive for mining. But also they are separate footwall, high-grade PGE systems as well, which are yet to be delineated and which we're working on.
Excellent.
And as I said, massive sulfide, untapped PGM potential hosts both in the massive sulfide and disseminated sulfide, in the footwall disseminated sulfide, also what's called the central zone, which was a mineralized area right in the middle of the lake, which was partially defined but still needs to be completed. East zones, as mentioned before, on the east side, there's very few PGM analyses, so we need to do a lot more drilling there so that we can put that into the economic model. And there are also a number of other satellite zones which still have only had a couple of holes in. So there's a lot of potential.
And so, Trevor, I had mentioned previously that we had done, metallurgical testing. Maybe you can touch on how those results came out.
On the left there is the hydrometallurgical processes which Starfield used in 2012. And as you can see, they did not recover platinum and palladium. And so they cooked in that process. We took that data and some of the material which was left over at the metallurgical plant, at the metallurgical laboratory, and managed to isolate a residue which was remaining, and we basically did some recovery work on that, and we managed to show just using the Starfield data and Starfield material, we managed to recover 77% palladium and 50% platinum. And then we in 2015-16 we completed some flotation work of creating two concentrates, one a copper palladium concentrate and the other one a bulk nickel platinum cobalt concentrate, and completed it up and finished the process by doing some what's called plateau recovery. And as you can see, the numbers were considerably better.
Yeah, significantly better.
Yeah.
Thanks, Trevor. So here we come into our capital structure. So as I mentioned, we went public in April of this year. We have total outstanding shares, just over 102 million. What's really interesting is that we only have 11 million, just under 12 million free trading. So the stock is extremely tightly held. And the rest of the shares there are escrowed, and they're released from escrowed based on a calculation done by the CSE, done by the TSX, where they come out of escrow every 6 months. I believe 15% comes out of escrow. So we're currently trading at $2.50, and our market cap is 255 million. I think what's also important is we don't have our chart here, but if you take a look at our chart since we started trading, we're actually we're outperforming the market. We're doing very well. Based on the fact of the cash we have on hand and the work and the results that we are putting out and the potential for our upcoming re-estimation of the resource. So I think that, there's a significant amount of place to still grow in the market. But, so far we've done very, very well. So I touched a little bit at the beginning on the fact that we have an extremely experienced team and seasoned team. Our chairman is a global entrepreneur, and he has a significant amount of industry experience, business experience, and is extremely well connected. And you can tell a little bit of that by who we have on our board. We have Rick Brown, who actually is with Sprott Capital Partners. But more importantly, our CEO, Dr. Yang, is extremely experienced. He has over 30 years of experience as an exploration geologist. He served as a senior consultant for Barrick, Inco, and Falconbridge. And he was also the executive vice president for Zijin Mining Group, which is a 40 billion market cap company. And he was chairman of the Sprott Zijin Joint Venture Mining Fund. So, and we, like I mentioned, brought Trevor on board as well. Recently, we just announced he's very familiar with the project. He was consulting on the project since, I believe, 2013, and he has extremely incredible mining experience, knows it well, and he's come on board as our vice president of exploration. So when we talk about what we've accomplished, well, we accomplished raising $22 million. We've taken the company public. The main focus right now is to increase the current resources from inferred to indicated to give us a platform to go to pre-feasibility. And what's really exciting is that we recently completed a re-estimation of the 43-101, which we expect will be able to release shortly, and showing the increased value there. We've also completed first part of our 15,000 meter drilling program for this year, and it's my understanding we'll be back in the fall to continue with the rest of that project. So with that, I thank you everyone for joining Trevor and I, and we'll open the floor to questions.
Sophy, basically sum up, you're sitting on assets that are demanded by the rest of the world, and due to industrial changes and also have the increased importance due to geopolitical situation. And kind of a couple of questions there regarding that, with considering, since you guys went public, you guys are doing incredibly well considering the market. And also going forward, do you guys need any capital injection for phase 2 possible?
Well, as I mentioned, we raised $22 million to go public. As of our last financial statements, we're sitting on 17.5 million cash. That is significant in that it takes us into the 2022-2023 exploration season. We do want to move to pre-feasibility, as I mentioned. So would we be looking, we're not actively currently looking. It could be something that we would consider in the future based on market conditions, potentially doing maybe some flow through and taking advantage of that here in Canada. I think when we look at how we're performing in the market, I think that's based on the fact that, we are sitting on a significant amount of cash for a junior mining play on the TSXV. So I think that helps us. We're tightly held. We have significant shareholder support. And again, as I mentioned, we're going to be doing that re-estimation of the 43-101, which is imminent. And I think that the upside potential there, the market recognizes that.
You touched upon demand on the PGM metals within the platinum group. Obviously, they were not in the original plan as things have kind of developed. Obviously, there's a cost inflation and everything, but is that offset by the price increase and demand increase as far as you are concerned?
My feeling is that right now, this originally was a primary nickel deposit. Now, based on the value of palladium, it is now a primary palladium deposit. So the value of the precious metals in the deposit have increased considerably more even than the nickel and the copper. So I think so, yes.
Trevor, when we look at Canadian North Resources and Ferguson Lake specifically, the resource, are there other resources either here in Canada or internationally that we could compare Ferguson Lake to for some reference?
Well, certainly nationally, you can compare the Eagle's Nest deposit, nickel copper PGE deposit in northern Ontario and James Bay, held by Wilo Metals. It is a 11 million ton deposit with comparable grades and coming in a vertical pipe but it is not open pittable. It is all mine. It's all an underground operation, and its market capitalization, or it is a potentially underground operation, and its market capitalization is not its market capitalization, but it has been recently been bought for over $600 million. There is no road access to it.
No road access. And when we're looking at international, what would be a potential comparison?
Probably the Julimar deposit in Western Australia, held by Chalice Resources, would be a good comparable. It has market capitalization of upwards over $2 billion, much higher value by investors, but it is not. I don't believe it has. It just has a resource estimate right now, and it has comparable geology and grades.